Hello, everybody. Thank you for joining. My name's Nick Worthing. I'm with American Mortgages, and we are happy to have you join us as we continue our webinar series, speaking on, as we bring partners in and talk about strategies and ideas that a lot of our clients and partners are doing from around the world to take advantage of some U.S. real estate. So tonight we are very happy to bring on Rauf and Noble Sky, who our company has partnered with quite a bit over the past few years. He's going to talk about their specialty in finance in investing in undervalued U.S. real estate, which is purchasing properties under market, putting some value into them, and then either selling them or holding them as a long-term hold. So again, we partner with them quite a bit, and they do a lot of really good work in this space. So we thought it would be a great idea to bring them on, share their knowledge and ideas with our clients. Once Rauf is complete, it'll come back to me and I'll talk specifically about financing options for this strategy, and then we will go to a question and answer. So if you have any questions along the way, type them into the Q&A at the bottom and we will tackle them at the end. So with that, Rauf, I will hand it over to you. Maybe you can tell us a little bit about yourself, your company, and then we'll dive right into your slides.
Thank you so much, Nick. It is a great pleasure being able to partner and do this co-webinar with you, GMG and American Mortgages. I have been working with you for a couple of years now. It's a real pleasure to work with you. And for the last few years, Noble Sky International has been helping and assisting a lot of investors from across Asia to break into the US market in a safe, secure, and profitable manner. A lot of people are very interested in the US market per se. They've always wanted to have a piece of the pie in the US real estate market, and they were always wondering, how exactly do I gain access to that huge economy? So we figured out the nuances, we figured out the system and the way on how investors across the world, in fact, can access the US market safely, and we've been doing it for the last few years, in fact, very, very profitably. So if you want, I can proceed on with my slides. Is that all right?
Yes, please.
All right, thank you. Just share my screen. So thank you so much, everyone, for being here. I'm Rauf Said again from Noble Sky International. We've been doing this since 2014, and especially from 2018 onwards, for the market at large, we've been offering our services in how we can help you to access the US real estate market safely, securely, and profitably. So we have been assisting a lot of our clients to acquire properties through government auctions, from wholesalers and direct sellers. So we are the go-to people on the ground. So a lot of our clients, when they speak to us, they are purely passive in their approach when they buy properties because they have literally almost no idea on what they want to do. And we approach them not from buying a property for your own stay, but instead to be able to acquire this property for investment purpose. So we help them either flip the property, or they can either also choose to earn income by putting the property on Airbnb. So we've been registered in Singapore and the US in particular. So just to give you a bit of a portfolio on an overview of our portfolio, what we've been achieving so far. Since 2018, we helped our clients acquire about 70 properties to date. Not as many as we would like, but of course, a lot of them are rather small clients. We help them acquire small properties, but it's not too bad. But this is the important thing, and this is the reason why we do this particular webinar today. The price that we paid for all these 70 properties was $3.77 million. 3.77 was the price that we paid for these properties, but the properties are at almost 25% of the market value because the real market value of the property is about $15 million. So this is the way we assist you by being able to acquire these properties at way under value. And a lot of people like this. They like the idea of buying at bargains. I'm sure a lot of you prefer buying at bargains. I'm sure nobody wants to be able to go out there in the market and say, hey, I want to be able to pay more than what the listed price is. You would like to, as much as possible, pay as little as possible for these properties. So that's where we come in. That's our specialty. I've never paid full price for any property to date. None. Okay, even with Nick, if you will realize when I work with him, some of the properties we acquired were way undervalued that we're able to acquire them super cheap because of the way we systemize our research, the way we do our walk the ground, the way we negotiate with the sellers. These are the things that help us to ensure that we buy them as cheap as possible, as high value as possible, so we don't want to pay too much for the property. Okay, so I founded this company in 2014, and we provide customized investing strategies for foreigners, mainly foreigners. We have a couple of American American clients when they are mainly expats across the world, but most of our clients are from Singapore, Malaysia, Indonesia. So close to 400 clients to date, and we are based both in the US and in Singapore, and we help you manage your asset on your behalf because you are not there. You are mainly in Asia, but you want to have a portfolio of properties in the US. So that's where we come in. We help you manage your assets on the ground so that you can sleep well at night while my team and I, we work through the night. So just to give you an idea, so we ran events across the Asian region, in particular Southeast Asia. This is our events in Singapore, events in Jakarta, in Indonesia, in Surabaya, in Bandung. We have a lot of clients from there. In Malaysia, Penang, KL, JB, Sabah, Sarawak. These are the cities that we went to. And in Vietnam, we also dabbled in Vietnam before COVID, of course. So we were in Vietnam for a couple of weeks, in fact, in Hanoi and Ho Chi Minh. And in Cambodia, we were in Cambodia for 2 runs, and in Thailand for a couple of runs, in Bangkok in particular. So you see all those events that we ran, and eventually some of those students became our clients, where we helped them find the properties for them and manage the properties on their behalf. Okay. And then at one time in 2019, we ran 2018, I apologize. 2018, we did an inner circle where I brought all my mentors from across the US into Bali, where we had a lot of fun, and they were teaching all my clients on exactly the US real estate market, how it works, showing them some of the other opportunities available back then. So this is, if you see the front row is my mentors and I, okay, and the back row are all my clients and students. So my vision is simple. Okay, we want to enable you, our clients, to be able to easily own multiple US properties that outperform your current investment with low risk and time commitment. A lot of people are busy. You're busy with your job, your business. You have no time to manage your asset, not more so halfway across the world, right? So you don't have the time to be able to do all this, but you want to be able to grow your portfolio in real estate. That's where we come in to ensure that if I were to flip a property for you, you don't have to put in any energy or time. Let us do that for you because that's our specialty. Okay. And then the returns that you gain from a flip will far outweigh, will be higher than what you can get in your other traditional investment options out there. Okay. That's where we want to be able to be that alternative investment option. So you can choose to own an asset that gives you higher than average returns. Okay. Why I chose the US market is simple. One, the sheer size of the country, the economy, the real estate market is huge. 38 trillion US dollars is a huge market. Some people ask me, why don't I go to the UK or Australia? I say, I'm having my hands full. Houston alone is giving me a lot of, taking a lot of my time. You see, so I don't have the time to really look at other countries. In fact, America is so big. There's an abundance of opportunity there. So I believe the US market is perfect for me to just focus in. And it's a lot more affordable than my local market, for sure. Singapore, nothing to compare. I'm from Singapore, and I know for a fact that I cannot afford to just buy 5-6 properties in Singapore compared to what I can do in the US. Okay, the US is a lot more affordable than my local market in Singapore. It's easy for me to acquire a property in the US. In fact, if you like to buy property tonight, I can arrange something for you. You want to buy all cash, we arrange, next week we'll close. It's that simple. It's possible, even using your personal name, although I don't recommend that. You also own the land beneath the property. Now in Singapore, owning land is only for the bespoke group of people who can afford tens of millions of dollars in investment. In the US, land is plenty. So you also own the land beneath the property, but most importantly is a price to value ratio. The value is so much, maybe 100%, but I only paid 20 to 30% of the value. So that's the beauty of buying properties in the US. Of course, you have to factor in renovation costs. So that will allow you to still buy them relatively cheaper than paying full price for the property. So the price to value ratio is also something that I love so much about the US market. Then some of the things that I know people are always wondering, but where do I go in the US? Exactly which part of the US market do I enter? Where do I exactly decide what to buy, where to buy, what exactly am I going to buy? Well, for beginners, especially for those who are doing this for the first time, well, look at a single family property. Single family means a regular property that is owned by one family or family that can live in the house, the regular house on the street in the subdivision, suburban area. So a single family property is a perfect start. It's a starter home for investors like yourself. Then where do you exactly choose to go? Well, this is my personal opinion. I've been doing this for about 5 to 8 years personally and for people. And I've always believed that the first thing that will affect my decision to invest is government policy. Right now, especially more so now, I will not just go anywhere in California, for example. I have a property in California that I'm looking to offload, right, and sell, but I would choose an area where the government is not slapping high taxes on businesses. The reason for that is because when the government is able to attract business to move into the area, into the state, into the city, that attracts growth in terms of businesses coming, big MNCs holding, opening up offices in the area, and then people are able to move there because their jobs are plenty, right? So government policy that's pro-business, pro-growth, low tax is my first choice. So Florida and Texas will be my two main state that I like to focus on. Secondly is the household income. Look at the data. There's a lot of data that you can get online. The median household income, you must see some form of growth in terms of where exactly is the people in the area, are they prospering as a family? Is the family able to earn a higher income year on year? So you must see a growth in that sense, okay? Median household income. Then population growth. Is there net population or negative population? So there must be people moving in there every day. Like Jacksonville, for example. I have a lot of properties in Jacksonville where we do a lot of flips, right? They are having 70 families moving into Jacksonville every day. 70 people, sorry. 70 people moving into Jacksonville every day. That means 70 people needing a roof over their heads. And that's why even though the recent news in the market whereby people are wondering, should they stay away from the real estate at this point in time, should they not invest? Jacksonville is not exactly having that issue. The properties that I've been acquiring for our clients, right, and the way that we buy these properties are still enabling us to still sell the properties easily to people because they are starter homes for the average American family. So the population growth is something that I've always looked at. I want to ensure that the area is facing a net increment in population. An average PSF value. What do I mean by this? Sorry, I saw some Q&A. Okay, I saw your question. We'll answer that very, very shortly. Thank you so much. Okay. Average PSF value, what do I mean by this? So look at the average PSF value that was sold in the particular city. For example, Houston, the average PSF value is $166. Okay. Houston is a big metropolitan area. Austin, a sister city, is a lot more expensive. It's at $310. Now, can Houston become Austin? I don't know. But for 166 to 310, there's a lot of room for growth. And to be able to just enter the Austin market, hoping for it to go to 500, is a bit risky for me. I am a bit risk averse. But where do I go? I find a big metropolitan area like Houston, whereby there's a lot of room for me to still catch up. Maybe next year, it go up to 200, 250. There's a lot of room for growth. So Austin's at 310, Dallas is at 217, Houston and San Antonio about 160, 166. So those are the cities that I like to look at because there's a lot of potential upside. And the cost of living index. People want to move to areas where the cost of living is a lot cheaper. Houston is quite cheap, not too bad, okay? But Jacksonville is a lot cheaper than Houston. They are around the same. So I was in those cities doing for work. And when I compare living in the Bay Area, because sometimes you got to fly into LA, it's a lot cheaper for me to just remain in Jacksonville compared to living in the Bay Area, in LA or in San Francisco. So this is what I like to do. I prefer to go to areas where the cost of living is a lot cheaper. Okay. Nick, do you want me to answer the questions now or do we do that afterwards?
Yeah, let's do it. Let's do it after. All
right, thank you. So my biggest rule of real estate investing is this: make money when you buy, not when you sell. And that's the topic of this particular webinar, buying at undervalue. And that's what I like to do. And I want to ensure that anything I buy is as cheap as possible. Okay. So one of the ways that we buy properties is through wholesaling. So if you're interested in buying properties undervalued, we can work with me. I can work with Noble Sky. Okay, I'll work with Nick as well, by ensuring that whatever we buy, we work with a wholesaler. We have a whole lot of wholesalers across Jacksonville and Houston that we are very active in. And by wholesaling, it means that wholesaler comes whereby the wholesaler will go into contract with the seller and then find a buyer who will buy the property at a profit to the wholesaler. Okay, for example, seller wants to sell a property at 65K, wholesaler contracted at 80,000, and then property value maybe 180,000. So if he sell the property to a buyer at 80,000, he nets the $15,000 difference as an assignment fee. So that's usually what they like to keep for themselves. They do the job of finding the best property for us. Noble Sky takes the property, underwrites the property, and check exactly does this fit our criteria. If it does fit our criteria, we create a proposal, we propose to our clients. If it doesn't fit the criteria, then we will just we pass on. 90% of the properties that we research, we don't end up buying, but that's part and parcel of our service. We do a lot of research to ensure that our clients buy the best ones. Okay, so all this can come from mailing lists, Facebook group, forums, plenty. There's a lot of it. You can scour all over the internet for potential deals. Not everything is a buy. You have to be careful with what you buy, for sure. So example, we have a mailing list that we are part of. So someone said they're selling a property in Jacksonville for 88,000. And these are the specs of the property, saying the ARV, the value is about 140K after you repair. So you check, you do your analysis, you check your property, you go to the property, walk the ground and check, ensure that the property is viable for you to buy, then take pictures and all this. These are ugly properties. Purpose for investment. Okay, let me say this, purpose for investment, not for you to stay and live in. Okay, if you want to live in a property, none of my criteria will fit anything for you because we just want to make the money. Okay, we want to help you make the ROI, not for you to live in. If you want to live in a property, it's a different criteria because you have to like the property. That's something else. Okay, so then we do all the research. You can see the fair market value. This involves a lot of data. This is just one corner of my spreadsheet. There's a lot more data that goes into the analysis. So at the end of the day, what's the cash on cash return? 32%. Is it good enough? If it's good enough, let's buy it. Okay, if it's not good enough, then chuck it aside, find the next one. Okay, so flipping, I want to show you an example of flipping that we did. This was one of the recent sale for the property. These are net numbers. Okay, these are exact numbers to the dollar. Okay, to the dollar, value 215, total expenses 142K. So you can see the purchase price, we bought it at $20,000. We spent about 93,000 on rehab. The selling cost was 29,000. Equity gain 72K. The sale price was exactly 215. The ROI is 63.35%. This is the cash on cash return. Okay, so when we buy this property, we know that we are able to buy cheap. So I want to show you what it looks like before it becomes like this. So this was what it looks like. You can see condemn. And a lot of people, when they see condemn, they freak out. Why am I buying this property? I had some clients who bought this property. They freak out when they saw this condemned, unsafe structure. Are you crazy? Why am I buying this? Because you're so used to buying property like a condo with a tennis court and nice swimming pool. All right. Then when we shift their mindset a little into buying undervalued properties like this, they kind of panic a little, but we tell them, well, calm down, relax. This is what we do. Okay. We convert this into something beautiful. Okay. So this is what it looks like when we acquire the property. It's bad. It's uninhabitable. Okay. And then we fix it up. A lot of work went into the fixing up the property. These are my full-time crew in Jacksonville. And then we eventually listed and sold it for 215K, 63.3%. Okay. So yes, there are capital gains and all this, which we will cover in a bit later on. Okay. These are a good question. Thank you. Keep your questions coming in. Okay. And this was what it looks like when we sold. All right. So on the side, it has a huge parcel of land. So everything is included. Even the washer and dryer is part of the sale as well. So you can see that it's a nice house for a starter family. A beginner family, a blue-collar worker, blue-collar family that wants to live in a house is fine. Well, I still make 63% on the money. So that's good enough. Okay. And these are my team in Florida that assists us with a lot of the renovations all across my Florida, my Jacksonville projects. Okay. Hernan is usually the lead foreman, and Liz usually coordinates all the paperwork for all our clients in Jacksonville. And I want to show you an Airbnb as well. Sometimes some clients don't like the idea of flipping. They want to be able, because flipping involves higher tax rates compared to income. Okay, so income property, in our opinion, we prefer the short-term rental, Airbnb. The Airbnb space fits us because of the way we buy the property. I'll explain very, very shortly. So take a look at this house. This is owned singularly by one Singaporean family. Okay, the value 330,000. We paid 260K for the house. Well, you will wonder, but this is not really undervalued. Well, it is, but not so much because majority of the house is not exactly being rehabbed. There's no renovation required. Only $10,000 worth of renovation necessary. Okay, furnishing was more than renovation. So total expense 288,000. We say about 41,000 in equity built in. The income from this property is $5,500 average, and this was the latest one that we pull out. Gross, of course, net will be about 15%. Okay, so gross $5,500, Airbnb ROI about 22.89%. So not too bad. So we look at the house. This is what it looked like when we acquired the property. Okay, it's normal average, but it's big. 3,000 square foot with a pool. Okay, with a pool. So take a look, and we fix it up, and when we list it, it looks like that. Okay, this was what it looks like when we list it on Airbnb. It's live now. There's a tenant, there's a guest staying in the house currently. You can see it looks beautiful. Okay, and the house is big enough to be able to house 16 people in the house. So how do I ensure we can achieve high earnings from Airbnb? By ensuring that when a big family or corporate group rents the house, okay, they're able to see value, because rather than rent 4 to 5 bedrooms in the hotel, they put lump everyone into one house. They have the privilege of using the pool by themselves, and they find, hey, there's a lot more value, which is what I do a lot when I travel with my team across the US. We rent one house, everyone stays there. It's more communal. It's a lot more fun. Okay, so that's what we do, and people find more value, so we can charge $400, $500, $600 a night for the property. And these are our other Airbnb listings you can check out. We partner with Twinity. They are professional Airbnb managers in Houston. Okay, so we've been partnering with them. They've been perfect partners for us, so we love working with them. And the other guy who helped me find the property in Houston is actually my good friend and my partner as well, my business partner, Chris Muldin. So he helped us with the properties, the sourcing of the property, the best property for us. I always tell him minimum 3 bedroom, hopefully 4, that have a pool and in a safe neighborhood. You don't want to own an Airbnb in the middle of the ghetto with a lot of gunfights and crime. Okay, nobody is going to rent in that area. So that's something that you have to be very careful about. You must feel safe walking on the street at night. So that's the criteria for buying our Airbnbs. So these are some of our clients who've been giving us testimony. Someone like Mr. Chan from Singapore who gave us very, very nice testimony. Okay, and Mr. Kamaruzaman Gafa also started one of our first few clients also from Singapore. And we have a lot of other testimonies from Malaysia, from Indonesia as well. Okay, so, well, if you want, okay, I will drop this link in the cannot drop me, I apologize. So if you want, you can take a picture of this, okay, if you want to reach out to us. But if you have any question and you want to find out more about what we do, you can check bit.ly/NSIXGMGAsia. Okay, you can just go to the link, key in the form, and then we'll be more than happy to answer any question. All right, Nick, over back to you. Thank you so much, everyone.
Thanks, Ralph. Very helpful information, and thanks for sharing those examples. I remember financing a couple of those over the past year, and it's good to see the numbers pencil out so well for the clients at the end. So, and I will sort of echo the comment you made about never buying a property at full price, and that can remain true even during the past few years when really everybody was buying properties over asking price, especially in the hotter markets like Texas and Florida. When we partner with Noble Sky, a lot of the contracts were actually under asking price with a lot of room for growth. So yeah, good info there, and well done. So I will talk about the financing options specific to this type of investing in the US. There's mainly 3 different ways that clients can finance this. Probably the most well-known is a fix and flip loan or a fix and hold loan, which involves the clients using the bank's money to purchase the property, finance the rehab, and then sell the property or refinance the property. So I'll give you an example of how that works. So say you buy a property find a property in the market for $200,000. you would use the bank's financing to purchase to finance up to 75% of that 200,000. And then say you need to put 50,000 into the home, the bank would then finance, depending on your experience in the bank, they would finance up to 100% of that rehab. So they would finance 75% of the 200 plus 100% of the 50,000. The 75% is used at closing. Once the home is acquired, then the 50,000 is then held back and helps you fund the rehabs on a draw schedule. So what that means is you will partner with a general contractor. They will complete the rehabs in portions on the home. As each portion is complete, they'll submit a draw request to the lender to basically reimburse what they spent on that. So if they spent 10,000 to repair the roof, once the roof is complete, they'll send a draw request to the lender saying, we've completed the roof, it cost us $10,000, and the lender would disperse 10,000 off of that 50,000 that they're holding back. The exit for this loan is either a sale of the property in the sense of a fix and flip, get in there, do the rehab, get your new value, get the property on the market sells, and the loan's paid off. And then a lot of times where our clients come in they're looking to get in, add value, and then hold it as a long-term property, whether it's a long-term rental or an Airbnb, like Ralph mentioned. So the exit in that would be get in, do the rehab, get the property where it needs to be, and then refinance into a longer-term mortgage. So a very popular option, and a lot of clients have done that pretty well. One thing I will say is none of the programs that we offer, including these, require any sort of U.S. credit or U.S. income, specifically for foreign nationals. Everything, especially these programs, are asset-based and appraisal-based, and some of the lenders will look at experience-based. But these are also available for first-time investors, especially if you're partnering with a seasoned company like Noble Sky or another well-known general contractor in the area. So that's option one. Option two is an option that's gotten a little bit more popular lately, and it's bridge financing. We've talked about this a couple times on different webinars, but it works for clients that have maybe they own the property currently that they're looking to add some value into, or maybe they have other properties that they own that have some equity that they can tap into. So if you find that same $200,000 home, and you already own that 200,000 home free and clear, and you want to put in, 100,000, we could do a bridge loan on that 200,000 value, give you the 100,000 in cash at closing. You then fund the rehab on your own, and then refinance or sell the loan or sell the home once the project is complete. Another thing that a lot of clients will use is maybe they have another property. If they want to, acquire this particular property, put some rehab into it, but they don't want to go through the process of getting a fix and flip loan, going through the draw schedule, getting the plans and budget approved by the lender. But they have another property that is free and clear or with a lot of equity that they'll do a bridge loan on the other property to indirectly finance the acquisition or the rehab on this one. So there's a number of different creative ways. The bridge loans are obviously quicker closes, easier closes with a lot less administrative paperwork because it's strictly asset-based and not having to look into any of the budget or who you're going to use as a contractor or anything like that. It's strictly appraisal-based. The last option is actually an option that also is quite popular. It's using all cash, believe it or not. So clients will have the cash to purchase the home in cash. They'll have the cash to do the rehab themselves. Obviously, this gives them a lot of flexibility to move on a quick close. They can handle the rehab as they want. And then once the home is complete, usually after a 6-month period, we can do a cash out refinance on the new value. And they take those funds to then move to the next project. So the way that would work is, say that same 200,000 home, you bought it for 200,000 in cash. You then put 50,000 in. The new value is now, say, 325. In 6 months, we would do a cash out refinance off of 325,000 value to recoup you back cash. And then you would take that cash to move on to the next project or use it as you please, as your business needs. So definitely lots of different options. Our team is very experienced in this and can help you kind of talk through which option is best. But we can definitely help with financing again. And the thing I want to stress is no income in the U.S., no credit in the U.S. a lot of times no experience in the U.S. So I think Ralph mentioned this can be done. I mean, it may seem like a daunting task, and it certainly would be if you did this on your own. But if you're doing it with somebody that's got a team set up, they know the contractors, they know the markets, they know the contacts and who to call, things will move a lot smoother for you. So that's why we want to bring him on. So thanks for that. So I know we've got quite a few questions in the chat. So Ralph, I will sort of I'll ask you these and answer them as you can. Some of the tax ones you can touch on, and then defer them as you need. But so the first question is, what about U.S. tax implication when you sell?
Okay, it depends on which approach you started with. If it's a fix and flip, the tax treatment for fix and flip and income property is very different. Okay, so as a foreign national, if you acquire, okay, just for everyone's benefit, to answer the topic on tax can take me about 3 to 4 hours. I'm trying to summarize all 3 to 4 hours in a few seconds. Okay, so if you need more clarity on taxation, reach out to us in private. I will be more than happy to answer you. We even have our own session whereby we explain about taxation in detail as much as we can. I'm not a tax expert. Okay, I have experience working with a lot of clients for the last few years. I can advise based on as a foreign national. If you're an American, please reach out to your own tax advisor in the US. Okay, I don't want to be sued by anyone. But as a foreign national, and how we want to approach this, there's two things. I want to either fix and flip, or I want to own income property. Let's talk about fix and flip. If it's a fix and flip, you as a foreign national do not own a US ID first. Okay, you gotta remember that. So you are a ghost to the IRS system. If you're a ghost to the IRS system, the problem is if you just buy the property, fix and flip, you're gonna get slapped with what we call withholding. Okay, so you don't want any form of withholding on your asset. So you have to have an entity set up, and the right entity is important here. So if I want to flip the property, I must own the property via an Inc. We call it a C corporation in the US. Okay, so that the activity of buying and selling a property is a business. Okay, and the Inc. acts as a tax blocker, so you don't get taxed, the Inc. gets taxed. Okay, and the tax treatment for the Inc. is at 21% on profits. So that's something for you to take note of. 21% on profit. Hopefully Biden don't increase it. Okay, let's pray for that. But 21% on profits that your company file at the end of the year. Okay, your company file for the previous year, and then whatever profit, 21% of that is what you're going to be taxed on. That's for flipping. It is not capital gains. If you're flipping a property, there's no capital gains. That act of buying and selling property is a business. It's ordinary. If you're buying a property for income, okay, that property is an asset. When the property is an asset, then there's capital gains. When I buy a property for fix and flip, that property is inventory. Two different treatments. So you got to understand where I'm coming from. Okay, so if you're buying a property for income, so the income, if you buy property 100,000, sell for 200,000, the $100,000 difference is capital gains. Now, there are several ways to defer this. We call it a 1031 exchange, or if you want to take the bullet, there's several ways to do this. But at the end of the day, you are going to be taxed based on the capital gains, okay, of whatever the amount. And there are certain methods to reduce this as a foreign national. Okay, so if you can, we can approach this. It's best that I speak to you in private, in person, because it depends on exactly what your situation is, your particular situation, then we can best advise you. Right, so that's where I can say for taxes. So taxes is very dependent on what you want to do, and how much money you're going to invest also plays a part. All this plays a part. Who you are? Do you have an ITIN? Do you have a social security number? Are you a US citizen, an expat? These are questions that we need to have. There's no one size fits all answer for tax. I'm sure, Nick, you've been receiving a lot of tax questions for the past few years.
Yeah, we do. And the answer is similar. You know, it's very situation dependent and client dependent. So it's definitely, you know, good to have the initial conversations, and then it's also definitely good to involve your tax advisor, because they're the ones that are ultimately going to give you the advice. So, but good answer. So next question is, I own a few U.S. properties. Can you get a mortgage and buy several homes at once?
I think you can answer this.
I can take this one. Yeah, and the answer is absolutely yes. You know, if you own those and you don't have any mortgage on them now, they've got a lot of equity, we can certainly refinance those homes pull the equity out, and then you can use that equity to purchase more homes, or our team can help finance the purchases directly. So the answer is definitely yes, and that's what we're here to help with. Next question says, if I recall correctly, Noble Sky is crowdfunding plus fix and flip undervalued properties, correct? And does not involve mortgages, correct? Is it now different? I'll take the first part and I'll say it is different because we partner with Ralph and his clients quite a few times and do provide the mortgages on the property. Our teams work in tandem and can make it as easy as possible for you. Ralph, maybe you want to answer anything or add anything to that?
Okay, so we've officially, as of 2023, Noble Sky decided to partner with GMG in a large degree to be able to offer some form of financing for clients who wish to be able to buy properties using leverage. And there are certain criteria to this, in all honesty, whereby internally with Noble Sky, if you want to be able to access leverage, you must be able to show some form of liquidity that you can afford to buy the property at leverage. If you're not able to afford the liquidity, then most of the time, we will help you co-invest with other of our clients, like what we've been explaining for the last many years. But if you do have the liquidity, then we want to offer you that option of being able to own this property outright by yourself. Although, okay, you have to also accept the fact that there's a lender involved in the entire transaction. And always remember, a lender always has first position over you. So this is something that you got to be very, very prepared about. And everything else is the same. You can buy a property, fix and flip for you. Remember, the lender gets paid first, not you. Okay, so the lender will always be the first one to be paid. Okay, so this is something for you to take note and be mindful about. All right, so we can always speak about this. We have been offering certain programs for some of our exclusive clients who has the ability to buy properties on their own, outright by themselves, and then we help them use leverage later on. So this is something that we are offering as of this year. So if you have the ability to have some form of liquidity, speak to any of my team members or speak to Nick, okay, then we can always discuss this at a later time.
All right, next question is also for you, and it's should you look at crime rate and demographic of people living in the area?
Yeah, yes, we do. In fact, my research that we have a spreadsheet. It's a long spreadsheet. That's level 1, level 2, level 3, level 4. Okay, we have several levels to it. So if it doesn't meet level 1, it doesn't go to level 2. So that's how we filter the way we do our research. Crime rate, school district, very good school district is something else, and that we consider as well. And what's the other one?
Demographic of people.
Demographic, yes, demographic of people who live and work there. Now, let me just also say something else about this. This question is also important, especially if you are a long-term investor. But sometimes, if you're a short-term investor, you are there in and out, right? You're not there to get married to the area. You're just there because you're able to find something really cheap. There's a lot of transactions in the area after your research, but the demographic and certain crimes are not exactly that great. Okay, there's some crime, murders and all that, but tell you what, the property that I show you in Nolan, the flip, that area, if you were to walk around the area in Jacksonville, you get a little nervous at times. Okay, but we still managed to earn 66%. Okay, on that because it's not a long-term project; it's short-term, so it's still okay. You make certain trades. You trade certain decisions over profitability, and then you decide, okay, is this viable? Then we decide, and then we discuss with you, then we go in. If it's not viable, it's too difficult, property cannot be salvaged, let it go. Okay, so it really depends. Okay, short-term wise, sometimes I am able to still buy a property with quite high crimes because it's just for the short term. Okay, hope I answered that question.
Yeah, and next one. So who owns the property between you buying from the wholesaler and being fixed?
Me? You want me to answer?
Yeah.
You own it. At the end of the day, you're the owner. And after closing of the property, you own the property through the entity that you hopefully have in the US. Okay, if you use your own personal name, I will advise not to shift it to an entity. That's what I will advise. Yeah, you will ultimately be the owner of the property. The ultimate beneficial owner is still you.
Next one's a tax question. Again, I think you might have answered this in the beginning, but there should be a capital gain tax, correct? And what percentage is it?
Capital gains tax, if you sell a property in the long term, for long-term properties, income property, there are capital gains tax. Between 15 to 25%, it depends. You got to check. Okay, we will see exactly how we can reduce this. There are certain ways. I would prefer to defer the tax using a 1031 as much as possible. But yeah, so if you want more questions or more answers about tax, okay, reach out to us in private, because it really depends on how you want to approach your investment and how much exactly are you investing.
Next question is for you as well. It says, how is Noble Sky making money? Are you commission based?
We can be commission based. We for someone to be a client on Noble Sky, we do have a certain enrollment fee, or not really enrollment, incorporation fee. As of this year, 2023, I saw some of my clients, apparently they're inside this meeting. Okay, but the past where we run things, we have a new way of offering and getting new clients on board. Okay, so there's incorporation to incorporate your company, your entity in the US, and then there's monthly subscription for the tax bookkeeping and proposals that we will generate for you. And at the same time, there will be the profit sharing on flip that we sell for you, or income sharing on any Airbnb that we manage for you, things like that. Okay, so whatever that you've seen in our past presentation almost remains the same, except whereby we don't charge a high lump sum upfront any further. Okay, so we have changed the model a little as of this year.
Next question is, it's a good one. It says, this is really good. And how do I make an appointment? I'm in Singapore now. So we will share the contact info for both myself and Ralph after this presentation, and we can also reach out to you directly to help schedule the appointment.
Sure.
Next question is on the lending side, so I'll take it. It says, for fix and flip and fix and hold property, do we get a pre-approval not knowing what project we are getting into? That's actually a really good question, and the answer is yes, you still should, but you're correct in that there's not a lot for us to pre-approve on the front end. So basically, when we have a client with this scenario, we are basically pre-approving them as a client, and their liquidity, their net worth, you know, if they've done this before, their experience in the industry, because none of the property details we're going to have until you actually find a property. So and you're not going to have them either. So you may have a budget that you want to stick to, but you're not going to know what the purchase price, what has to be done to the home. So all of that will have to come at the end. But if you need a pre-approval letter to make any offers, we can definitely do that by verifying liquidity, verifying experience, and just making sure that we're comfortable that you will be able to get financing once you identify a property. Next question is for you, Ralph. Is this typically how long do you hold the property for flipping?
Okay, so in the past, we've been averaging about 9 to 15 months, sometimes a bit longer, especially during COVID when we had to drag certain projects. So we try not to lengthen too long. As of now, where we are looking at between 6 to 9. Okay, for new projects with new crew working on the projects, between 6 to 9 months is still possible for us. We just have to find a new batch of crew to work on a project. Once that's done, we can do it between 6 to 9 months. This is our typically what we can do in a new area. Okay, so sometimes we have properties in Jacksonville. We don't want to add more properties into the queue. So we want to be able to open up new area. We have a new area now in Savannah, Georgia. We're buying Savannah, Georgia, where I have my mentor who's there, who is flipping about 100 properties in Savannah, Georgia as well a year. So Savannah, Georgia is the new area that we're entering. So if you tell me about 6 to 9 months is possible. But let's be ready about 9 to 15. That's usually our average before this.
Next question is also for you. Are you active in the New York area as well?
We have properties in New York, yes. Although I am looking at offloading the New York properties after we fix them up and then collapsing the team, move them to Jacksonville. I'm not exactly a big fan of the snow any further, because the snow will kind of like bar me from being able to work productively for my team, and they're just dealing with this heavy snow is quite tough. And winter seasons and all that is something that is very annoying, especially when it comes to flipping. So I would rather focus my team in the southern states like Texas and Florida.
Next question, and I'll take, is what's the loan interest rate for us as a foreigner? It really depends on the type of program and property you're buying, and also your experience. So like I mentioned earlier, this fix and flip lending is a lot of experience underwriting into it, meaning the lender wants to look at how many properties of this scope you've done in the past, typically 3 years. And if you've done say 5 or more, then you're less risk to the lender, so they price it better. So I mean, a typical fix and flip loan is going to be anywhere from right now I would say anywhere from about 9.5 to 12.5%, just depending on again on the property, the what you're going to do to it and your experience. And then on a long-term loan, I think you're probably aware rates just kind of across the board have been up. The good news is we have been in a downtrend the past 4 weeks, and we've seen rates continue to drop. So right now we're starting at right about 7.25. But again, it depends on the property and what you're looking to do. So our team is very available to price any scenarios for you and give you an idea what you can expect. Next one is 3 questions in one. It says, in the current high interest and high borrowing cost environment for prospective buyers, how easy is it to flip a property? Is the income yield from long-term rentals better than Airbnb? And what average occupancy do you see for Airbnb? You want to take that one, Ralph?
Sure. I think I recognize this person. I'm trying to recall. Jane Xiao. Okay. Thank you, Jane, for the question. High interest and high borrowing costs. Let me explain something that's happened in the market. Before this, in low interest environment, people were buying like crazy. They will buy properties at $400,000, $500,000, $600,000 in value. That's usually what happens. They were paying so much for the property, and that's the bracket that they're at. All right. Now, Noble Sky has never entered that area of buying too expensive, $400,000, $600,000. I don't believe. Nick, do you remember me telling you to service a loan or anything above $400,000? We don't. Some of properties, I think to him, like this guy is buying so cheap. But the thing is this, all right? The 200,000 to 300,000, 150 to 300, around that range of property. The ones people who were able to afford the very expensive in the expensive bracket are now coming down to the bracket of 150 to 250, $300,000. So now there are more people, okay, clamoring for the cheaper starter homes, the one that Noble Sky has been in since before. So we are in a situation whereby people who were once able to afford 400,000, 600,000 no longer afford that because too expensive. They have kind of like came back and what's the word? Adjusted their taste for something more real, I guess, and they're buying something a lot more affordable that can fit their budget. Okay, so that's where we are. We are going too low, below 100,000. It's not usually in a desirable neighborhood. Yeah, they're in what we call a Class D, all guns are blazing area. You don't exactly buy in those areas so much. I don't dare to enter those areas anymore. I used to, but it's something that I kind of stay away from. I go into the Class C or C plus, okay, or B minus C plus. Those are the areas that I usually dabble in for my clients, between 150 to 250,000 or maximum 300K. I don't buy anything beyond that, all right? Because that is the category whereby a lot of people there's a lot more potential buyers, and buying undervalued in the area, although more competitive, will be safer for me in the long run. Okay, so
the question she has, how does the yield compare for a long-term rental versus Airbnb? And then on Airbnb, what's your typical occupancy rate?
Airbnb all the way. I know sometimes Nick asks me, are you going to put a property on long-term rental? I say no. I'm getting better yields from Airbnb. 3 times the amount, frankly. That my yield is 2 to 3 times more than what I can gain from a short-term rental compared to long-term rental. Now, for you as an investor, and let's say you're working with Noble Sky in this case, you are passive regardless. You're a passive investor regardless of whether it's Airbnb or long-term, because the people managing it on the ground, it's not you, it's us. If you're managing it by yourself, then there is a consideration because you're putting your energy, time, and mind span to manage tenants or manage guests. So maybe you feel like, hey, I'd rather deal with long-term tenants rather than check-in, check-out guests and doing all by myself. So that will not make sense. But because you're doing this in a passive manner with Noble Sky, hopefully, we manage everything for you. So you would definitely choose long-term, long-term, sorry, not long-term, Airbnb over long-term. That's what I'm sure you would choose. And our average occupancy rate, I can actually share this with you. We have the info recently, about 80 to 90% occupancy per month. That's what we've been getting per property so far. 80 to 90% occupancy.
Perfect. Next question is, how many can you buy? And I can take that. The answer is really up to you. It goes down to one.
Any as you want.
Do you have the cash to support the purchase and the reserves, and then also do you have the risk appetite to do them all at one time? We've got clients that own up to 75 different properties, and then clients that are going in on their first property. So again, it really depends up to you and what your goals are. Next question is, what's the maximum loan to value and minimum loan amount? On the fix and flip side, the maximum loan to value is going to be held for people that have done this in the past, because the lenders want to know that if they're going to leverage up that high, that you're comfortable with this project and have done it. And if you're in that range, then you can be at 75 to 80% of the purchase price plus 100% of the rehab. And if you're new to the game and this is one of your first or maybe your first project, you can expect that to come back both on the loan to value for the purchase and then also the rehab. So you just have to put more equity of your own into the deal. Next one for you, Ralph, is with leverage on. I'm not sure we understand that. I'll follow up with you on this one. But next question is, if the property is so run down, how come locals are not buying it easily? Also, what are the chances of getting a high flip price? So essentially, if the property is so run down, why aren't the people on the ground taking advantage of it?
You want me to take that?
Sure.
They are. I am in competition with them day in, day out. They are buying. Sometimes we just win because of the way we do our research. But a lot of time we don't buy anything or everything. But locals are very active in the markets that I'm in. The locals they don't see us as a threat, frankly, because there are a lot of other local players as well. So we're just one of the many players in the area. Who gets to buy the property at the best price wins most of the time. They are buying.
Next question: How easy is it to get a mortgage for this? And it's our company does it all the time. It's our focus, and also when you're looking at this fix and flip market, the lenders a lot of time are really focused on this industry as well, and a lot of times they're focused on this market. So if it's a good property with a good plan, the chances of getting approved are very high. The lender can see the value in buying it at a certain price, putting a certain amount in, and they can estimate what the after repair value will be. So the chances are well if the plan is put together well. But good question. Next question is again about interest rates. So again, I think I answered that earlier. It really depends on the program. But this does bring up a good point. It says interest only possible for fix and flip. And the answer is yes. So fix and flip loans and bridge loans are actually almost always fixed interest only payments. You're not going to find principal and interest on those loans. You're just going to be supporting the interest through the life of that short-term loan. And then when you refinance the loan, that's when you'd be looking for principal and interest. And interest only is actually also available on a long-term loan as well. So that's one tactic that a lot of clients are using right now with rates being high, is utilizing an interest only payment to keep it down. And then when rates improve, they'll refinance at that point. So good question. Next question is, what's the cost to create and maintain a U.S. entity to hold the property? I can take that one, Ralph. And it's actually fairly reasonable. There's a number of people that can help you with it. There's a lot of companies out there that are on a national base that you can do everything online. I registered a company myself, last year, and it was registered within 7 days, and I think the total cost was about $300. So very easy. You just go on their website. A lot of times, say the state and the type of entity, and they'll walk you through the exact documents. And then maintaining the property. A lot of them will actually act as your what's called a registered agent, which means they're the ones that are going to be filing the appropriate paperwork each year and giving you the annual renewal fees that particular state requires. So There's a follow-up question that says liquidity of. I think you're mentioning earlier when I said as long as we can verify your liquidity. And what I meant by that is your cash available in the bank. So this could be cash in a bank account, or it could be liquid investments, which means you can have access to those investments. That's really what we're looking for as a broker, and also what the lenders are looking for is how easily and how much cash do you have available in the transaction. This one's for you, Ralph. It says, who has final decision on when to sell? If I want to keep the property for 24 months, but Noble Sky wants to sell after 9 months, what happens?
Who's the owner? If you're the owner, your decision ultimately holds, not mine. So if you're the owner, but of course, my other question, if you're entering the property for flipping, right? If we are able to hit the target returns, then we sell as fast as possible. If you want to hold the property for long term, you're the ultimate owner at the end of the day. You can decide if you want to sell in 6 months. It's up to you. I don't advise that, but at the end of the day, you are the owner. You can choose. I advise whether you wish to take my advice. It's up to you. But this is how it works. If you're the owner, you have ultimate decision.
Next question is, do you offer non-recourse loans? And yes, we do. There's definitely a fewer lenders that require recourse, just because a lot of lenders would prefer essentially the borrower signing a personal guarantee, and that's essentially what non-recourse means. Is the loan is just made to the LLC, and the person behind that LLC isn't really liable personally for the loan if the property went bad, with the exception of fraud or anything like that. But most of the lenders will require a personal guarantee, but particularly on the larger loans and larger projects, you can find some non-recourse options out there. Next one, in average, what percentage is a management fee to Noble Sky?
Okay, so we are referring to the profit sharing. So in terms of profit sharing for flip, it depends on your capital size. We have certain brackets for that. Gold, platinum, and premier. Anyone below 50,000 capital that they've invested in a project is about 60-40. You get 60% of the profit. We only take 40% of profit. Between 50 to 250,000 in your capital that you've invested in your projects, we take only 30%, and above 250,000, we take only 20% of the profit. So it really depends on the amount that you invest ultimately. For income property, it's a little different. Same thing, is between 10% of the income to 20% of the income.
And that's pretty typical for property managers around the nation as well. So next question, this is an interesting question, is any strategies to devalue a property to revalue it later? Maybe you can take that, Ralph, but I could, that's definitely part of being in the negotiation process, finding things that may have, through an inspection, things that are need to be fixed on the property, and maybe you can negotiate some way to sort of bring down the purchase price. But maybe if you want to add anything to that, you certainly can.
You're spot on. We always, when we want to buy the property, always find everything impossible to just bring down the price. But when we want to sell, we try to protect ourselves to ensure we have a higher sales price. So Nick is correct. Inspection, we will bang down the value of the property, saying this is going to cost me so much, but so and so is going to cost me so much to fix up. But when it comes to fixing it up, if I were to face with the same thing, I will try to argue back with the seller, the buyer, say, hey, actually it doesn't cost that much. I still want to sell a lot more. So we look at the inspection report, try and bring down as much as possible the price, and when we want to sell, we ensure that we were able to sell it as much as we can from the furnishing of the renovation that we've done.
Next question, this is a good one. It's, how do you see the accelerating decline of real estate prices in the U.S.? And while construction cost is fairly high, is flipping getting risky? And that one's for you, Ralph. So what's your take on the outlook of the U.S. real estate market since we've seen prices come back?
Okay. Yeah, around that, right? How do you see accelerating decline of real estate prices? Okay, so it's not affecting all markets. Just to be frank, you might be reading the news that's talking about the entire nation, okay, or state. But investing in the U.S. is very hyper-local. If you look at data for the entire country to invest in Jacksonville or to invest in Houston, you're going to get very skewed data. It's not going to help you. Okay, you got to go very much into the local. Sometimes even the city is too big. You got to go into the neighborhood. All right. So that's how localized investing in real estate is. But to answer your question is this, it's a fair question. Construction costs have been going up. True. Okay. So all this has to be factored in during before you buy. Before you buy, all these numbers have to be factored in. You got to do line by line cost items to ensure that you factor in everything that's gonna cost you when you acquire the property. And then eventually, how much you're going to sell it for, what can you buy it for, what's your profit margin will ultimately determine whether you want to buy the property or not. Okay, so your research is key. You got to ensure you do the best research possible for the property to factor in all these costs. Okay, and then at the same time, when you feel confident, the numbers you're confident on the numbers, then go for it. But will I say it's all no risk? No, I won't. There are risks associated with every single investment, including fix and flip. There are cases whereby we had to bear a significant cost of increased rehab because, for example, there was, for example, that property that I showed you in Jacksonville in Nolan, the amount that we factored in to fix up was only $70,000 or $80,000. But if you remember, the number for rehab was $93,000. So we had to fork out $13,000 of Noble Sky's own money to put into the project to ensure that the property can eventually be sold. Okay, so these are some of the things as project manager for you. We help you out. Right? We work hand in hand with our clients, with our investors to ensure that the best outcome is met for all sides at the end of the day. Okay, so it's not going to be risk-free. There are risks associated with it. How do you minimize the risk is key here.
Perfect. I think you just answered the next question about what keeps you up at night. I'm sure there's a lot of things that keep you up at night. So if you want to add anything to that, you certainly can, or we can move on to the next question as well. But I think you've answered it well.
Okay. I don't need to answer that again. Right?
And next one is, in profit share, do you take into account the borrowing cost? So the question is, in your profit share, Noble Sky's profit share charged to the client, is that net of borrowing costs or before borrowing costs? So essentially, is your revenue share on the client's net or on the client's gross?
Okay, so where we come is always what the point when the payment is to be made to you, the profits to be made to you, that's the point in time we split. Okay, so minus off all the borrowing costs and everything, then we are your partners in this. We're not here to ensure that we are paid first. No, all right. We are your partners. We are married to you together on the ground in the US. So the lenders will be paid first. There's something that we cannot control. There's some point, and then the profit that is left on the project just before we disburse the profit to you, at that point in time, we split 20, 30, 40%, it depends.
This is a good question. It says, who are mostly the buyers after we renovate? Are they local or foreign buyers?
Locals. For sure, locals.
And then the last two are more about the split. I think what Ralph is trying to say is it's on the net number. So the borrowing costs are taken into consideration. It's really the net number to the client is when the split is. Is that correct, Ralph?
Which one? Which question is this?
It's just a follow-up to the revenue share and where is that revenue share calculated? I think what you meant was the revenue share is calculated at the point where the net money goes to the client. So if they're going to net $1,500 a month, that's when you would calculate your revenue share on. Is that correct?
Correct.
So I think we got all the questions. Like I said, our emails and contacts will go out after the presentation. So if there's any further questions, definitely reach out to us at any point. Myself and Ralph are able to answer any questions, and we're both very available. So
not on monthly. I'm talking about flip finish. Not sure. His question. I'm not so sure whether we answer this question.
Yeah, maybe you can reach out to us after the webinar, and we can maybe have a more specific conversation. It's sort of hard to gauge what you're asking here, but I think we can definitely answer it on a one-off. So anyway, thanks for joining, Ralph. The information was very valuable.
Pleasure, Nick. Thank you for having me.
Absolutely. Our clients, I think, will find a lot of value in this, and yeah, again, thank you everybody for joining, and we look forward to working with you and answering any questions you might have. Thanks a lot. Bye-bye.
Thank you, Nick. Bye, everyone.